what I'm curious is, obviously we've had recently, all the earning reports that have been coming out, and most of them have been ridiculously positive. I gotta say, and that led to a bull market being probably extended, longer than what I thought it would be. Maybe it's just the beginner in me that I thought, back in 2022, at the tail end of it, everyone's talking about this pending recession and the hard landing and all the other things. And here we are. Yes, we've had some banking troubles. We've had, at the time of recording this, we're talking about First Republic Bank being bought out by JPM. But I don't know, it's been more positive than I thought it would be. What are your thoughts?
The market just seems like it just wants to keep going up. Crisis after crisis comes, but the market's not dropping. And what happens is that we just got the GDP numbers for US last quarter. It was what 0.1% growth.
Wow.
So if it's actually shrinking. So you can almost say with a margin of error of 0.1% that we're almost in a recession. So and what happens with the stock market is that it bottoms 6 months before. So if we're in a recession now, we've already seen the bottom in October, November, which is what average history has done in terms of the stock market and when it goes into a recession. Now, what we see is that the earnings weren't that bad and companies are even guiding strong. The first, the way the bear market started last year, it was tech collapsing and then everything else followed after that. Now tech seems like it's getting out of the bear market the quickest, and you see that healthcare, staples, all these things are slowly coming out behind it. So it I wouldn't call it a blanket statement recession. What the pandemic did was it helped certain sectors grow, and then it rotated from healthcare to tech to staples to airlines to cruise ships. It was everyone went into a boom and bust in different stages. So that's why it feels like now that tech is doing well and certain sectors are doing well as well, there are other sectors that are going into recession, but overall the economy, it feels like it's going to be a soft landing because it's a rolling recession rather than everything collapsing at once, is what I think.
So, how much do you think the all the banking troubles that we've been having for the past, ever since Silicon Valley Bank collapsed, how much of it do you think will dictate the rest of the market? Let's say until the end of 2023.
I think I could be wrong, but I think after this First Republic Bank is done, they're I think they're just showing that no matter what happens, it's just the economy will be fine. It just depends on which bank are you putting your holding your cash in as a consumer. That's the worry. And you know what? One tweet can go wrong and a bank can go bust. There could be a bank run. So it could stop today after this. But again, if I would be worried if I had my cash in a small bank, if I was in the US. So if enough people get worried and then the word spreads, it could go on and on to another bank until the Fed or the government make a blanket statement that all your deposits are insured, something like this. Otherwise, I would be worried.